Right then, hello everyone, and just another update from us at the end of another week of trading. We'll start with the calendar. Not a massive amount of stuff out over the course of the week. We did have the banker calendar out on Wednesday. They ended up hiking rates by 50 basis points. Consensus was for a 75 basis point hike, but market's probably a little bit unsure about what that means going forward. Are they going to continue hiking rates for longer at a slower pace? I'll say a slower pace, a slower size, but continue to hike rates for a little bit longer, or is this a slowing down of hikes? So market's a little bit unsure of that. Dollar kind of a little bit choppy in the aftermath. Off the back of that, we then come to the ECB yesterday, and we got a 75 basis point hike out of the ECB yesterday, which was exactly what we were expecting. Although three of the members of the committee did decide that they wanted a 50 basis point hike instead of the 75, so maybe a slight bit of dovishness coming in from some members of the ECB, which is historically something that has happened quite often. So nothing too out of the ordinary when it comes to that. Euro dollar was a little bit lower yesterday. But then we came into GDP. So GDP yesterday, strong GDP gives the Fed more room to maneuver in terms of rate hikes going forward. We've had strong inflation, we've had strong GDP, we've had a few strong numbers the lead up to the Fed next week. So it does leave the Fed with a little bit more wiggle room to hike rates to cool down inflation, which and obviously with the GDP as well, GDP figures as well, of course, a little bit of cold water on the fears that we are going to get a recession, certainly in the US, and a global recession. But if growth continues to surprise to the upside, that does pour cold water on that as well. So we'll come into today. Bank of Japan, more of the same from Bank of Japan. Again, sticking to the script, not changing monetary policy. I was reading a comment earlier that they were they made a suggestion that they were willing to ease if necessary. CPI is supposed to remain at a relatively normal percentage and then cool down again into next year. So more of the same from the Bank of Japan, sticking to the script, which is pretty in line with what we would expect to see. We'll flick back across to the charts, and what we can see here is a couple of different stocks. Now we can see Meta, formerly Facebook, obviously Meta now. We can see Google here. We can see Amazon. Missed revenue on Amazon, slightly weak in earnings when it comes to Amazon. In terms of Meta, missed the EPS figure, slightly negative earnings on Meta as well. Couple that with the fact that they're going to put more investment into the metaverse, which investors don't really seem to think is a good idea. Which only time will tell when it comes to that one. In reality, Google missed EPS, missed revenue. Google did poor earnings all around. Pretty strong percentages lower on something like Meta. I mean, you come down here as 25% lower, 26, 27. Come round to Google, it's 13% from the highs. So quite substantial moves lower in the couple of those stocks. Amazon as well, from the highs of this week back there were further 10% down. So pretty weak. Pretty weak charts. Looking at the charts, kind of pretty solidly lower. We also were 3% lower in the Nasdaq yesterday, and Nasdaq finished 3% lower. So couple that with the GDP figures. Strong GDP figures giving the Fed more room to maneuver in terms of rate hikes has probably contributed to some downside in the Nasdaq as well. So these big heavy hitters in the tech stocks, they are pretty strongly lower, which has then brought the Nasdaq pretty strongly lower with it. So that's kind of where we're at. In terms of stocks. I mean, we come across to the dollar and just have a quick look at the dollar. We did have a pullback earlier on in the week in terms of the dollar, which would normally give some respite to stocks. We saw, Monday and Tuesday here was a couple of updates on Google, couple of updates on Amazon as well. So this pullback in the dollar earlier on in the week did open up some opportunities long some stocks, and then that's since sort of slightly turned around. Although the Dow Jones is still higher yesterday, S&P down a couple of days now, and then the Nasdaq down pretty heavily yesterday, but the Dow Jones has still had a positive week higher. No doubt this US dollar having a bit of a pullback helping it as well. We'll come around to the US 10-year yield as well. That we were speaking a little bit last week. We were up here Friday last week, up at 4.3%. We've come back down to this 4% level, and we've managed to come through it, and we're just below 4% now. So a bit of a pullback in yields as well, a bit of a pullback in interest rates, lending a bit of support to some stock markets, and lending a bit of providing some negativity for the dollar. Certainly earlier on in the week we have a little bit of a pullback off a couple of days of risk off trading, should I say. And this 10-year yield, if that continues to truck lower, should prove supportive for stock indexes and negative for the dollar going forward. So this 4% level will be interesting as we head into the close. Do we close below it? Do we close above it? I mean, in terms of like for 0.1% above or below heading into next week, it's probably not that important, but that 4% level is important. I think if we can get back down below that, down to 3.5 or something, that should continue to push the dollar lower, and should continue to, or should in theory lend a bit of support to stocks as well. So that is definitely something to keep an eye out going on into next week. We'll have a quick look at cable as well, a little bit closer to home before we move back to the calendar. Slight bit of upside over the course of this week. Rishi Sunak has got into power. He's the new Prime Minister. Rishi Sunak's the new Prime Minister, and markets have taken that as a bit of positivity. Sterling certainly likes it. We had a couple of upside days, but that was a couple of strong upside days earlier on in the week. Cable was more strongly higher than the other currencies, but when it comes to the dollar, it was a pretty broad-based pullback in the dollar, so that's to be expected for this to be higher. But Rishi Sunak being the Prime Minister is likely seen as a bit of a positive by markets, certainly more of a positive than Liz Truss was. He seems to understand or seems to have a better understanding of economics, seen as the fact he was Chancellor not so long ago. Not that much going on across the board this week in markets. We'll have a flick into next week though, when things start to liven up a bit more. Couple of central banks this week, 3 central banks this week. Really not a great deal coming out from them, but there's a bit more of bit more action as we come into next week. Monday there's a few figures, some GDP figures out of Eurozone. We'll come across to Tuesday. We do have the RBA. The RBA is supposed to hike, or predicted to hike interest rates by another 0.25%. Interest rates in Australia are probably going to have a terminal rate lower than the rest of the world. They are still dealing with a drag on the Chinese economy. They just announced a zero COVID lockdown again in Wuhan, which is further likely to cause kind of negativity surrounding the Chinese economy, which then in turn is not good for the RBA, or Australia as a country, sorry. So the RBA probably a little bit more reluctant to hike interest rates at the same speed as the other central banks, just because of that sort of a reason. But then we'll come into the Fed. On Wednesday. We can see the Fed 75 basis point hike is what we are expecting. But the clues on future monetary policy adjustments, the forward guidance we get out of Fed, will probably be more important than that as a rate hike. We had an article out in the Wall Street Journal a couple of weeks ago that the Fed was potentially looking at a 75 this meeting, then a 50, and then another 25 into next year, and then to call it quits after that. There's then other rumours swirling around that we're going to get a continuation of hikes at the same speed. So markets will look towards that with great interest to see if we can get any further forward guidance to see where we may get a terminal rate for the federal funds rate. Bank of England then. Bank of England, we come across to the Bank of England, 2.25% we are at now. Consensus is for 3%, so 75 basis point hike. We did have Andrew Bailey making a comment a couple of weeks ago that there's 100 basis points is a possibility, and that there is potential for hikes to be more than expected in the future. So we'll have to see then how that plays out. I think risks for that are tilted to the upside, which then should prove clicked on that by accident, should prove supportive for sterling, certainly in the near term. But the UK is expected to go into a recession quicker than some of the other major economies, and the higher those interest rates go, the more they have to cut, but the higher the interest rates go, maybe the deeper the recession gets. So whether that's seen as a positive or a negative, personally I'm a little bit unsure. Probably short-term positive on a 100 basis point hike. What that means going in the kind of medium term, probably a little bit more difficult to look at. We then come into non-farm payrolls. Consensus for a drop on last week's figures of 263. We'll have to see how that plays out next week, next Friday, but we've got a little bit to think about before then. We'll update again next week. But from us here at LAT, that is it for another week of trading. So have a good weekend, do recharge the batteries, and we'll be back next week with another weekly market insights. Thank you.